Crypto winter is here. At least that is what we are being told. And we have a lot of craziness going on with it. Now, you guys may have seen the announcement from Coinbase yesterday, basically saying that in the case of a bankruptcy, that essentially all of the funds that are held within that entity, i.e. Coinbase, would not be returned to the users. It's basically a blatant statement that what is in Coinbase is not yours. So that needs to be very clear. As we go through these bumpy times, self-custody is going to be very important. I encourage you guys to start learning how to self-custody every single one of your cryptos. If you're going to be holding on to it and not cashing it out directly, in the winters, it's time to go ahead and move them out. This is when we start seeing exchanges fold, right? This is when we start seeing more hacking going on. This is when we start seeing things kind of start to get a little bit more Wild West, you know? And in that Wild West, you need to take your gold, throw it in a safe, and bury it in your basement. And so you're going to take your crypto, put it in a safe, and bury it in the basement until we're out of the winter, because otherwise you do risk losing your assets if they're on any public exchanges, any kind of centralized exchange, i.e. Coinbase, crypto.com, etc. Once again, also you can check out the BC Vault hardware wallet down below in the channel. That was actually sent to me by crypto.com. So glad to have them as a sponsor, as they do support self-custody. Let's go ahead and get into this though. Crypto winter sparks. Coinbase stock crashes Bitcoin, Ether, and other major cryptocurrencies crater. Shares of popular crypto brokerage Coinbase plummeted to a record low Wednesday after the firm reported a worse than expected loss, spurred by dwindling trading volumes, prompting a flurry of analysts to downgrade the stock as the price of Bitcoin, Ether, and other major cryptocurrencies plummet to nearly one-year lows. Coinbase stock plunged 26% to a record closing low of $53.72 on Wednesday, posting its worst one-day drop ever and pushing the stock down 84% from a peak in November. The same month, Bitcoin also hit its latest record high. Triggering the stock plunge, Coinbase revealed its first loss as a publicly traded company after the market closed on Tuesday, reporting a second quarter loss of $430 million compared to a $771 million profit 1 year earlier, and revenues that fell 53% to $1.2 billion. In a letter to shareholders, the firm said plunging crypto prices and volatility that began late last year directly impacted results and pushed trading volume down to $309 billion, 8% lower than last year. But that it remains as excited as ever about the future of crypto, given developments like the launch of its marketplace for non-fungible tokens, i.e. in short, NFTs. At least 7 analysts downgraded Coinbase shares or lowered the stock's price target after the earnings report, with Wedbush analyst Mosh Khatri noting the company attributed the loss to increased investments in new products despite what's emerging to be a crypto winter. Fueling uncertainty Wednesday, the price of Bitcoin briefly plummeted below $20,000, hitting its lowest point since June. It actually went below $26,000 last night, and I'll talk about that too. After the Labor Department's monthly consumer price index report showed inflation exceeded expectations despite cooling last month. Though Coinbase reiterated that volatility is part of cryptocurrency's long-term price cycles, Raymond James analyst Patrick told clients he suspects there is more than a bit of truth that the recent sell-off could be more serious, quote, particularly with crypto failing to serve as an inflation hedge thus far in 2022, end quote. Now, that is something that obviously we talked about yesterday, and it is that Bitcoin isn't proving out to be this hedge against inflation. Parts of the reasons surrounding this, as you may have noticed, would be that institutional investment. Look, in a bull market, we love institutional investment. It pushes the price up even further. And this is something that seems to be good for the crypto market in general because new technologies get more money, larger funding, and are able to expand. However, that does mean you get tied to traditional finance. So it's hard to sit there and say, well, if you create something that's supposed to be against traditional finance, but then you allow all the traditional finance to come in, large institutions and so on, how much does that defeat the purpose of cryptocurrency, specifically as related to the fundamentals of Bitcoin, right? And then this is kind of what you end up seeing. You see stronger ties to the institutional money, to that sort of thing. And then when the traditional markets start to crash, crypto follows along. Then crypto also, because it is traditionally more volatile and is expected not to have the same correlation, ends up getting a lot more fearful, the market does, within crypto. And you have larger crashes than even in particular some of the traditional markets. So it's frustrating to say the least, but it is like how I see it as far as the best that I can articulate it in. We'll kind of talk about this too, because there was a tweet from Kim.com that was really interesting that I wanted to address as well. But Coinbase debuted on the public market last April after watershed year for cryptocurrencies, fueled largely by growing institutional adoption. The firm's market capitalization hit a record closing high of $76.9 billion on November 9th, just one day before Bitcoin hit its latest peak of roughly $69,000. However, recent months have proved difficult for the nascent market. Bitcoin has since collapsed more than 55% amid mounting fears over the Federal Reserve's effort to curb inflation by easing pandemic-era stimulus measures. Once worth more than $3 trillion, the cryptocurrency market now commands about $1.5 trillion in value. What to watch for? Quote, over the long term, we continue to believe that significant retail pricing pressure is a matter of when, not if, and also believe the cons of increased crypto regulation down the road will decidedly outweigh the pros, end quote, writes Shaughnessy. There we go. We did it this time. Beginning in late 2017, a wave of early regulatory crackdowns, largely targeting then booming initial coin offerings, sparked a nearly 80% crash in the cryptocurrency prices and a years-long bear market. On Tuesday, Goldman Sachs analyst Will Nance downgraded Coinbase shares, but said he still believes the stock is, quote, the blue chip way to gain exposure to the crypto native ecosystem, end quote. Other analysts were also less bearish, with Needham's John Todaro keeping a buy rating and saying he remains excited about the Coinbase's blockchain rewards and cloud subscription services. Bitcoin has tumbled 35% so far this year. I think that was a little bit more too now. While Ether, XRP, and Cardano's ADA have plummeted 39%, 47%, and 57% respectively. There's some more reading there, and like I said, I do want to pull up this tweet because I just remembered it, and I thought it was interesting. It's a little bit of a tinfoil hat, I would say, because it is, Kim.com, I suppose. But I think it brings up an interesting point that we should address if it's still here. Let me see if I can find it. Not usually how I do the news show, but I didn't mean to pull this up. While I was reading that, I was thinking about this tweet, and I thought it was really interesting. There's Peter Schiff. Peter Schiff is just happy today, huh? Seems like he is. There's the one for Homie. That one's important too. The rich dad, poor dad guy. There it is. I got the tweet. Don't worry. We figured it out. Boom. So Kim.com yesterday, he had kind of a short thread I think it's important. He said, the world is on the brink of major economic collapse. Made in the USA. Again, when it happens, don't let the US government and their media fool you that this is because of Russia. It's not. This has been a long time coming, and it's because of excuses that the US empire couldn't afford. Times will get really tough. It will be a global depression. When it happens, remember who did this to you, your corrupt politicians and their corporate paymasters. There's nobody else to blame. In foreign lands, look at leaders who chose to be US puppets. It's their fault too. Here's the final one, which is interesting. He says, here's what's going to happen. Most have been in a coma induced by media lies, but with the big crash comes the awakening. You'll get the pitchforks and dismantle the corrupt system. People power will reign and corporate power will end. Crypto will be your new financial system. The reason why I thought this was interesting, and the timing of it, obviously during the crypto crash, during the economic crash, etc., that's going on right now, is that this does line up with the sovereign individual in a lot of ways. And I find it interesting that this is where a lot of people are starting to call, I guess, essentially the awakening. And then almost everybody that's discussing this type of thing is starting to say that essentially you will see crypto be the thing that ends up kind of, I suppose, surviving. I'd like to hear y'all's thoughts on it. Obviously, there's some tinfoil hat. You want to be careful with the FUD surrounding it. You don't want people to freak out all the way. I get it. Do you find validity in some of these statements when you see them from people like Kim.com? Do you think there is validity in there? Do you think the timeline is longer, shorter? Is it 5 years? Is it 10 years? Is it 30 years? Do you think it doesn't happen at all? Do you think this whole idea of the dissolving of nation states is a possibility to where we have smaller governments? What do you think? I'm curious. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.